Joining me now is Jimmy Lee. He's the CEO of the Wealth Consulting Group. Jimmy, welcome to the show.
Thank you. Good morning.
All right, so there is a lot to unpack today. Markets have just opened. What are you looking at most closely as we go into today's session?
Well, it's a great day to be here. I mean, the Nvidia earnings report was a relief to a lot of people concerned about, this potential AI bubble. And, I think that a lot of investors are thinking that buying on the dips is what we've been doing, is maybe the potential good thing to continue to do until the year end. And so I think that, and relieving a lot of concerns around other issues that people are talking about, private credit. I think, interest rates going up recently have been one of the factors on why stocks have sold off a little bit. And as I said earlier about buying the dips, we think that that's a continued a good strategy for investors that are looking for the long term. We think that there's a chance that we can see 7,000 on the S&P 500 going into year end even.
All right, and let's dive deeper into these Nvidia Q3 earnings. What did you take away from the report and CEO Jensen Huang's remarks afterward?
Well, it's about revenue, and I think a little less concerns about margins and the guidance for next year. And so we know that the AI story is not going to be over, and Nvidia is right at the center of this. And so the concerns about this ecosystem, though, that a lot of people are talking about, and some of the leverage that not all the companies, but maybe one company in particular is using to finance a lot of this stuff, I think is the big concern. And we may get some sort of an adjustment in the future if there's a blip with one of those companies in that ecosystem. But I think in the long run, the spend and what people are investing into, or companies are investing into, we think will continue to happen. I think also investors are looking forward to what it's going to look like longer term in terms of the second and third derivative type companies that are related to this AI boom, how they can benefit. And at some point, investors are going to want to see this return on this big spend.
And I know there had been some trepidation in the AI sector recently. Do you think that Nvidia's earnings have restored confidence in this sector? And how do you think it'll affect it more broadly? Well,
certainly, yes, in terms of continued spending. And, I think the biggest concerns from a macro perspective are the elimination of jobs. Jobs right now, obviously, is a big thing, a big topic today in a slowing economy. And so I would like to see the Fed cut. And as I talked about with interest rates going up a little bit, I think that's one of the reasons why we had a little bit of a sell-off, is that the chances of a cut in December have come down. I personally believe that the Fed will cut in December. And I think that what the pricing is today on how many cuts next year, I think we could get potentially a little bit more.
All right. Yeah, that's right. I think about 40% of traders are pricing in a December rate cut. Why do you think they're going to cut in December if that number has gone down?
I think that the Fed's going to be a little bit more forward-looking, and I know that they, know that the, economy has slowed down, and especially in certain areas where the consumer has not as much money as other consumers, and so I think the Fed cut will help those consumers more. Just like I think in other sectors of the economy, like small cap stocks, for example, are more affected with interest rates, right? And so as rates come down, I think you get more broadening out in the markets. And the trade that's been, heavily into the Max 7 and big tech trade, I think will broaden out as we get lower rates.
And September jobs report was released at 8:30 this morning. What are your takeaways from that report?
There was growth, right? And I think the concerns might be that since we're still adding jobs, that the Fed's not going to cut. But I think that with all the revisions that we typically get with those reports, I think that longer term, I think the Fed knows that we're still in a restrictive kind of a situation with rates. And so I think that they'll be sensitive to that.
All right. And I understand that when it comes to sectors, you see some risk in energy. Why is that?
Well, we think that energy is the potential, big problem with the AI boom, is that in order to use those chips, you need power. And so we've seen a big sell-off in some of these, like nuclear stocks, for example. And so I think energy is important, and so I think that could be the risk in terms of what could slow down the AI boom continuing to occur. And so I think that's in terms of energy. But when it comes to overall different sectors, we think that this broadening out theme will happen. There are trillions in cash in money market funds that we think will come out of money markets as rates come down, as the Fed lowers rates, and will go into longer duration assets such as bonds and some equities.
All right. Thank you, Jimmy Lee, CEO of the Wealth Consulting Group. Thank you for joining us at the New York Stock Exchange.
Great to be here. Thank you.
All right.